I'm Peter White. Welcome to the Inside Network. Welcome to INDepth. I'm Peter White, and my guest today is Damien Cronin, head of the Alceon real estate investment business. Damien, welcome.
Thanks, Peter.
Let's talk about the private real estate debt market. Can you just give us an overview of this market?
Non-bank finance comprises about 10% or $40 billion of the total $400 billion commercial lending market here in Australia.
How does that compare with overseas?
Small by global standards. So globally, non-bank lending makes up anywhere between 20% and 50% of the total market. The market here in Australia has grown since 2016 when it was closer to 4%. So it's been substantial growth over the last 5 years. Following APRA imposing additional restrictions on the banking sector back in 2016.
Will that rate of growth be maintained in the immediate future, do you think, or not?
We see scope for further growth over the next 5 years, probably growing from 10% to 15%.
And was it likely to stabilise then, or will it keep on edging up?
Look, I think there's scope for it to keep on edging up if that non-bank capital is able to accommodate a lower rate of return.
And how important is the market in the general economy?
Oh, hugely important, I think. The stability and growth of the Australian market will dictate the capital flows into the Australian market.
How will changes in interest rates or the housing market affect your business?
Look, interest rates are predicted to rise in 2022. The extent of that rise is important. It certainly will dampen demand for new residential product. But we temper that with what's happening elsewhere in terms of population growth, unemployment levels, wages growth, etc.
Now, you invest not only in real estate, residential real estate, but greenfield land development and other forms of real estate. Can you just talk us through that menu?
Yeah, so residential can comprise, as you say, anything from land development through to house and land product, townhouse development and apartment development. The risk of that menu, as you say, varies significantly. So land, for example, is relatively elastic in terms of its value. It's very responsive to movements in the residential market generally. So we manage that by monitoring the LVRs that we lend against land and the duration of our land lending. In the case of development, the key risks are market risk and delivery risk. Market risk is predominantly mitigated through pre-sales, and delivery risk through having a capable and well-capitalised builder on a fixed price contract.
And do you lend on commercial as well?
We do. So on yielding assets, the primary focus is what the underlying value of the security is.
Who's a typical borrower, or is there a typical borrower?
Yeah, typically private developers who are looking for flexibility, speed and certainty of funding.
And what happens when a loan goes wrong, and how often has it happened in your business history?
Yeah, look, over the journey at Alceon, we've done more than 350 projects. Fewer than 10 of those would have been in what we call genuine default. In all cases, we've recovered all principal and interest on those transactions. The greatest risk is builder risk. So it's around program cost overruns, builder solvency. So we focus very heavily on the builder risk and the financial capability of the builder.
It's quite a remarkable history, though. No losses and no investor losses. How does that compare with your peers?
We don't really track our peers too closely. Yeah, we just do what we do. So.
And speaking of peers, where do you see yourselves in the market?
So our funds under management at the moment is around about $4 billion. So we focus more on deal quality and on being the best at what we do. We don't particularly focus on growing funds under management for the sake of it.
Well, Alceon is not a well-known name, I think it's fair to say, but it is growing in identity. Where would you be in the top 5 or top 10? And what are your aspirations in terms of market share?
Yeah, look, we would be in that, certainly in that peerage, but we don't focus on growth for growth's sake or where we sit in the market particularly. We just focus on transaction quality. We co-invest in everything that we do, and that's important in focusing us on risk management.
So, I mean, just give me a rundown of the characteristics of Alceon. If I'm an investor, who hasn't heard of you, but I'm certainly attracted by your past performance of 8% this last year, which is, I think, a remarkable performance given the interest rate environment. What's your selling line to me?
Oh, look, we invest in real estate. We've also got a private equity business and a listed equities business. Real estate's predominantly what we do in terms of, our funds under management's perhaps 80% weighted towards property. We invest across sectors and up and down the capital stack, and we take a very live view in terms of where we perceive there to be the best risk-adjusted returns.
Then how do you control that risk? How do you put yourself at that really conservative part of the risk spectrum?
Look, I think we structure things conservatively. We've obviously done a lot in the residential development space, so we have a real ecosystem in property. We have a deep network in the market, and we approach everything with a mindset of protecting capital first and foremost, and then delivering the returns secondarily.
And who are your typical investors? We talked about borrowers before, but the people who give you the funds to invest in these real estate projects.
Yeah, look, our investors comprise predominantly family offices and high net worth wholesale investors domestically here in Australia. We also have a number of institutional mandates that invest alongside us.
Your fund, newest fund, achieved 8% last year. What's the outlook for returns in the coming 12 months?
Look, we're projecting returns to compress as the capital demand in this space continues throughout 2022. So we're predicting a 5 to 7% return target for that fund.
And looking at the big picture, the world's a relatively troubled place at the moment. We've got saber rattling in Russia and Ukraine. We've got China being very aggressive. How do those big macro issues affect your business, or they don't affect your business?
Yeah, look, they certainly do affect our business. We always maintain a house view on where the market sits.
What is that house view at the moment?
In the residential space, given the substantial growth in 2021, we're seeing a moderately negative correction through 2022.
And what about COVID? How has COVID affected your business?
Everyone would agree that the market in Australia has been very resilient through the last 2 years of COVID. We're not expecting that to markedly change through 2022.
Damien, thanks for talking to us today.
Thanks, Peter.